Hey, this is Patrick Findaro with Vetted Biz. Thanks for joining us today. Today, we're going to go through the two most popular franchises in the United States, if not globally, McDonald's and Subway. Our analysts at Vetted Biz have reviewed well over 2,900 franchise disclosure documents, 1.1 million SBA loans, of which over 100,000 were issued to franchisees over the last 30 years. If you haven't already visited our portal, I encourage you to do so. We try to create the most transparent, relevant information to would-be business buyers or franchisees to help power your search. We want to give you the tools so you can go through the data yourself for finding and analyzing the best franchise or business opportunity for you and your family. So again, my name is Patrick Findaro. I'm one of the two co-founders at Vetted Biz. Today, I'm going to be reviewing two franchises, data that we have on our portal related to McDonald's, as well as I'll go through the FDD, the franchise disclosure document. For those that don't know, it's a federally regulated document that the franchisors are required to update on a yearly basis and keep current if they're still seeking new franchisees. Many states also regulate the sale of franchises and have their own filing requirements on a state-by-state level for ones that regulate the sale of franchises, such as in Maryland, California, Washington, Minnesota, where franchisors must register to sell their franchise. So we have a lot of FDDs going back many years, especially for some of the largest brands like McDonald's and Subway. So today I'll be going through some of the relevant financial information for McDonald's and Subway. For McDonald's, they do disclose quite a lot of information on their FDD in terms of historical financials going through franchisees that have been operating for over a year. So real quick, just wanted to go through franchisors have emulated their business model. It was founded in 1955. It's based in Illinois, headquartered in Chicago. We're going off data from their FDD released in May of this year, May 1st, 2020. They have 659 corporate locations. That means McDonald's themselves own and operate those 659 locations. But compared to the number of franchise units that they have across the US at nearly 13,000, the corporately owned and managed locations is very small. One thing I wanted to bring before going into how much it costs to open a McDonald's and then how much McDonald's make is the data on units opened and closed. So going back to 2016, you could see basically for every 2 locations they opened, they closed 1, which is not a great ratio. But when you look at to 2019, for every 1 location they opened, they closed 1.5 nearly. This is not a good ratio. You don't want to necessarily be investing in a franchise system that is closing more units than they're opening. And if that is the case, you want to have a very clear idea of why they are closing these locations. Is it due to the poor performance of the operator? Were those locations not sufficient and they should never have been opened? It's really important to understand why these units are closing before investing in a McDonald's franchise, Subway franchise, or any franchise for that matter. So how much does a McDonald's franchise cost? The total investment to establish a McDonald's franchise is as high as $2.2 million. This includes the franchise fee, that is $45,000. This excludes any land or lease costs. There are many McDonald's franchisees that also own the property. So the initial investment amount can range anywhere from $464,000 to around $2.3 million. And with that, it includes the franchise fee, working capital needs generally for the first few months. And all of that is detailed in the FDD, which for McDonald's is a 500 plus page document. And then once the store has been built out and operations begin, that's when you have to start paying the royalty fee, which is 4% on monthly sales, and then the marketing fee of 4%. The marketing fee is a little high compared to other food and beverage franchises. This includes data from 523 food and beverage concepts. That's how we calculated the average marketing fee at 2.3%, as well as royalty. So McDonald's royalty at 4% is a little lower than the industry average for food and beverage franchises, although the marketing fee at 4% is significantly higher. So it's very important to understand how they're using those marketing expenditures to help improve your store operations, principally through increased sales. I'm going to pause for a moment and go through the McDonald's FDD. Okay, so here you can see the FDD from 2020. One of the key areas of the franchise disclosure document for any franchise, whether it's McDonald's or not, is the item 19. Roughly 50% of franchisors, especially the large franchise systems, will disclose their financial performance. In addition to the item 19, it's important to talk to franchisees to better understand the profit and loss and reasonable expectations for the point to break even, ability to open up multiple locations and then have shared costs throughout those locations. Those are all important factors to consider before investing in a franchise. So you can see here, of the approximately 12,000 US McDonald's restaurants opened at least 1 year as of December 31st, 2019, approximately 79% had annual sales volumes in excess of 2.3 million. So that's pretty substantial. And you can see 70% had annual volumes in excess of 2.5 million and 60% over 2.7. The average annual sales volume of a US traditional McDonald's restaurant open at least 1 year was right around $3 million during the reporting year of 2018. The highest and lowest annual sales volume in 2019 for those domestic traditional McDonald's restaurants was 12.6 million and 654,000 respectively. I like to also see the median. So the median sales volume of the US McDonald's restaurants open at least 1 year, again, as of December 31st, 2019, was 2.9 million, which is way above average for a food and beverage franchise. Key to know, when you're talking to franchisees, if you're looking at investing in McDonald's, are the new franchisees coming in making that much, or are those the ones that have the best location and they've been in that location for the last 20 years? Very important to understand, are the ones clearing 2 million more predecessor locations that have been operating for many years, or are they more the new locations? And it's really important, if you're not buying an existing McDonald's, to really understand and talk to franchisees that have recently opened up McDonald's franchises, say over the last 2 to 5 years, and see how their performance is. It's great that they also include pro formas, so you can see product sales to say on the low end, 2.3 million. Total cost of sales, 655,000. 28%, pretty good when you're looking at your cost of goods sold. If labor is also 30%, maybe a little higher, a little lower, and cost of goods sold as well as labor's under 60%, usually in a pretty good situation. 55% is great, and anything 50 or below is extremely excellent for food and beverage franchise. You can see the gross profit at 71% is fantastic. Other operating expenses, so this includes rent, service fees, depreciation, amortization, interest, and this excludes rent, service fees, depreciation, amortization at 45%, and operating income before occupancy costs at 607,000. And generally, operating costs, it shouldn't be more than 10% of your sales. There can be exceptions there, though. So overall, very solid financials for McDonald's. For those considering investing in a McDonald's franchise, obviously, if you're looking to purchase an existing McDonald's location, it's a little easier because you can go back 3+ years on the tax returns and do a forensic due diligence together with your accountant. And for opening a new McDonald's location, there's a lot more factors to consider, especially if you're going to own the property or do a sales leaseback. There's a lot of options in terms of a ground up McDonald's that you build, or if you're looking at non-traditional outlets like in an airport, train station. Those are other things. There are a lot of other items to consider. At this time, I'm going to transition to reviewing Subway, and we're going to go through the data as of the FDD issued this year. I'm going to go ahead and share. So again, you can see my screen. Quick recap, food and beverage franchises. Our team has reviewed over 500 franchise concepts. The average cost of a food and beverage franchise is $460,000. So we just reviewed McDonald's. McDonald's, the low end's around that, and the investment amount could be way above $2 million. For Subway, we'll see it's significantly less than the average for food and beverage franchises, and that's been a big reason why Subway has opened up so many locations throughout the U.S. and abroad. The average food and beverage franchise industry percentage fees for royalties, 5.3%, marketing fee, 2.3%. We will see for Subway that the royalty fee and the marketing fee is substantially more than the average for food and beverage. And that can create issues in terms of money flowing into your pocket and what hits the bottom line. And at the end of the day, how much money you make from a Subway franchise. So for Subway, the investment amount on the low end is $100,000, and the investment amount on the high end is $342,000. There's 23,800 franchise concepts in the U.S. with 0 corporate units. As I mentioned, the marketing fee is substantial, 4.5%, nearly double the industry average. Royalty fee at 8.0%. That's significantly more, 2.7% higher than the average for food and beverage concepts. Food and beverage concepts generally have tighter margins, where compared to some service franchises, say in the educational space, where the margins are higher, and a large part of the royalty fee is going to creating the curriculum, updating the curriculum, where for Subway, and franchises such as Subway, oftentimes you're buying the products from third parties or preferred vendors. And it's really important to look at, is Subway making money from that, or are other food and beverage franchises making money from those vendors and chargebacks. It's an important thing to look at. But overall, having a royalty fee at 8%, I think that is pretty difficult to justify, especially when you look at the stats for Subway. Back in 2016, at the beginning of the year, they had 27,129 locations around the United States. Now we're looking at the end of 2019. So fast forward 4 years, they're down to 23,000 locations. That's nearly a 3,500 locations that have basically the system's been depleted of those locations. Over the last 4 years, they have closed over 5,000 Subway locations, while they've only added around 2,000 locations. That's a serious issue when you look at, we were talking about ratios for other franchises like McDonald's, for example, where for Subway, every unit that opens, there's nearly 3 units that close. And that's not a very promising ratio. If I was in the position of opening up a Subway, knowing that 3 of my fellow franchisees had closed or were in the process of closing when I'm going about opening up my first location. So really important to understand, why they're closing. Is it operational? Is it because there are created too many Subways nearby? What is the reason? Some of the minimum net worth requirements are to own a Subway is $80,000, and then the applicant must have liquid assets totaling $30,000. So with that being said, you can see that a lot of Subway franchisees will leverage finance from the SBA, Small Business Loan Administration, for example, where there's been tens, if not hundreds, of loans issued to Subway franchisees. And on a later live stream, we'll be reviewing the SBA loan data for top franchisees, top franchise systems such as Subway. So we can see for this, for example, that it is eligible for SBA loan finance. And we will have more information in terms of the particular success and default rate of SBA loans issued to Subway franchisees. Again, minimum net worth required to own a Subway is $80,000, and the applicant must have liquid assets totaling at least $30,000. So looking back at the Subway profile, probably a reason that a lot of Subway franchisees had to close is they might have run out of cash and they couldn't pay their debt servicing. Especially for those Subway franchisees that have opened up multiple locations. You hit a crisis like the coronavirus, your sales are down 70, 80, 90% for a few weeks or a few months. You can't pay your loan off. You still got to pay rent. That's when you can run into a lot of issues. So I can imagine there have been over the years a lot of over-levered Subway franchisees, where banks might have traditionally been more accommodating to issuing loans, given the branding of Subway and the sheer number of locations, without even really looking at how many locations have been closing compared to locations opening up. And you can see on that chart here, red is the number of closed, let's go real quick through right now I'm going to go through the FDD for Subway. Just toggling the screen. Okay, so for Subway, they don't disclose in item 19. So in terms of knowing exactly how much you're expected to make, or really historically how much people have been making from a Subway, we went through the FDDs of the last 5 years, and they're not disclosing these numbers. Now, that doesn't necessarily mean the financials are so bad, but in our experience for a franchise system with over 100 locations, and Subway, in fact, has over 20,000 locations, and they're not disclosing financial performance, I'd say that's a huge red flag. And you have to be very careful at looking at the profit and loss of existing locations. And it's a little easier if you're buying an existing Subway franchise, as you will have that information during your due diligence. But it's a little more problematic for opening up a new location. So I wanted to thank everyone for your time today. It was a pleasure reviewing some of the most popular franchises, including Subway. Feel free to visit us at vettedbiz.com to understand more about what franchises are available. We have over 1,700 with complete profiles. We're constantly updating with more information to empower your franchise search, as well as we have right now around 40 existing businesses for sale, where over the coming months, we anticipate that number to clear 1,000. Again, thanks a lot. This co-founder of Vetted Biz, Patrick Findaro here, and I hope we can help power your franchise search.